Welcome back, Alpha Hunters. Hope everybody is doing terrific this Thursday. All right, so what do we got going on in the market today? Well, Tesla did not do well, but it didn't matter because we got to this morning, and actually we were actually set up for a lower open this morning. We can go through a little bit of all that. But we were set up for a lower open. And then we got the data this morning that we were supposed to get. GDP, and the markets ripped it pre-market, and we'll talk a little bit about that. Anyways, nice little gap up here, about 0.4%. No, a little bit higher. But yeah, about 0.45%. Nothing crazy. Nothing that we didn't take out yesterday's high. You can see we've basically been within the trading range of yesterday afternoon's kind of market sell off. The intraday high to low, which we basically just now put in the intraday low, has been 0.5% high to low. So, yeah, I mean that's how it goes. This is how it goes. What's going on, Diet? Let me get through this market rundown real quick, and we'll run through some things. How you doing, brother? All right, so the Qs. One thing I'm watching here on the Qs, and obviously it's really important right now as we are selling off on the market, and basically we just did fill that gap. So we did have that open gap that basically we just filled it. It is what it is. I was kind of hoping to see an island reversal. Obviously the Qs are lagging behind. You got the SPY actually basically flat, a little bit positive. IWM positive, DIA positive, RSP 0.5% up. That's the best performer. But you can see the Q is actually a third negative on this past 12 minutes or so is selling off here, and looks like a lot of people are starting to lock in tech profits. So we'll see if it continues going on. IWM though, nice gap up here on the IWMs, kind of faded down like Qs and SPY before it. Not major breakdowns here. Still positive a little bit. Nothing crazy. DIA, Dow Jones Industrial Average, kind of just choppy. Higher opens, down from the open. A little bit more bullish action there in the first 45 minutes. RSP, the biggest outperformer on the day. So typically whenever the RSP kind of leads, this is financials are doing well. Financials are doing well. There's a lot more financials out there. That kind of in the S&P 500, a lot more of the financial companies that kind of take up the weighting. So up 0.5% here, not down too much from the gap up. Gapped up roughly 0.75%. You can see it's not doing too bad there on the intraday. Let's see, it kind of makes sense. Yeah. Also, utilities looks like it's doing pretty well. I mean, they're maybe not. I don't know. That's kind of hard to judge. There is some red out there on financials. Maybe I'm a little off on that. We'll have to see. Dig a little deeper. We'll dig a little deeper. All right, let's run through the daily. How's the daily look, or the daily time frames look? Nice gap up. Yesterday's sell-off was kind of an interesting one, but it pulled back into the daily moving averages. Could look to consolidate here and push higher. We'll see. Here in the next couple of days, I wouldn't really do anything right now. DIA, Dow Jones Industrial Average, kind of looks like it's consolidating, pulling back into the moving averages that are uptrending. I wouldn't really do anything right now. IWM, kind of mentioned into the previous couple of days, we gapped up 2 days up to about this 198 level, 198.3 level roughly, and sold off both days back to back down. Today we gapped up and sold down again. We didn't open up there all that high, but we did open up about 1.5 lower, or about a point lower than what we did. What was that, Tuesday, Wednesday? So the thing I'll say is there's definitely selling going on here. Obviously, it's pretty obvious. The thing is you better see the breakdown, or this thing is going to push higher, because we are seeing selling, but we're not breaking down. So you better see that breakdown of these moving averages very soon, or it's going to start to push higher. And if people are trying to short here, they're going to have to cover as we push higher. So, yeah, but there is obviously selling going on there. You just want to see it break down sooner rather than later. You don't want to see the breakdown take its time, because typically it won't take its time. All right, Qs, kind of just mentioned it, just filled this gap that we had. I was kind of hoping to see an island reversal. Let's go intraday. Early market extended, and my mistake. I actually thought we were a little lower than that. I actually thought we were down in this area this morning on the Qs. Maybe we were on this buy. I'll check. But yeah, you can see, we had that pop when we got the GDP data, and that was kind of the data that we got. SPY, a little bit lower, kind of where it is now. Okay, so we weren't as low as what I thought we were pre-market. It's all right. But we are definitely not holding. Obviously, the SPY, 2 gap ups in a row, kind of looked like the IWM, right? 2 gap ups in a row, roughly the same level, kind of selling down. So people are taking the opportunity to lock in profits. This is kind of how it is. Qs, obviously getting some pretty good selling. Qs are pretty extended here. Definitely want to see it pull back. And, it is what it is. It's not going to be an island reversal now. So unless we kind of close where we are now and then maybe gap up and then discount the wick that we had on Monday, markets don't really work that way. But yeah, I would say if we close here a little bit higher and then maybe gap down tomorrow, or tomorrow, Friday, there would be a case for a little bit of an island reversal there, not a total one, as you'd have a little bit of overlap with that wick that we had on Monday. But some people don't like to count wicks. I do. It's just kind of your preference. SPY though, same kind of deal. Gapped up, selling off. Hasn't broken down yesterday's low yet. And there you go. Now I'm going to take a quick look at one of the most important stocks on the day, TSLA, and very much mentioned. There was 4 possible scenarios, and this was, to me, the more probable one. I just wouldn't have played this until it actually gapped below this mid 190s. And I looked at this morning, it almost worked to a T. Kind of mentioned if it gaps below this mid 190 line, it would probably retest into that very quickly and just look to take that bearish. And it did basically that. And what this signifies here, because this is already a hell of a downtrend that we've had go on here on Tesla since December 28th. This is people giving up. That's what this is. This is people giving up. I would imagine this probably continues on here for a few more days, because people are just going to continue to give up here over the next few days. But there will be a very sharp rally, and it'll probably come pretty deep. So we'll have an open gap. We'll also have this huge kind of downtrending high line going out. So I would imagine this thing probably continues to sell off. There's no way you could probably play this right now, in my opinion. It's already in a move. It's already pretty extended into a move. So I would just keep an eye on it if you want to maybe go counter trend, because it's going to get pretty extended as people will probably continue to give up on it over the next few days. And I'd maybe look to take it positive, bullish. And we can take a look at that, in the next few days, few weeks, see how something maybe sets up here on Tesla. But I wouldn't want to be a long-term investor here. I've kind of been in that boat for years. Last year for TSLA, I'm going to just briefly talk about this real quick, but last year for TSLA was all about margin compression. And the 2 years before that was all about competition coming into their space, into the EV space. And now, what you saw over the past 18 or so months with EVs, the EV space, was, talking about margin compression with Tesla, but it's not just that, but it's people that were interested in buying electric vehicles, but they couldn't get their hands on Teslas because, demand was really high. But now people, are stuck with their interpretation of electric vehicles from non-Tesla electric vehicle companies, right? Or non-Tesla electric vehicles like GM or Ford or Fiat, Mercedes. So, does Tesla provide a better high quality electric vehicle experience? I'm sure they probably do, This is what they've been doing. But people that have bought electric vehicles over the past 18 months, 2 years, do they feel like electric vehicles are great? Well, if you went with one of the other competitors, probably not so much. Probably just not as good of an experience. So I think that continues. Will probably continue to hit Tesla because now the perceived notion of electric vehicles is just not worth it, even though those people just didn't even buy a Tesla. So that would just be kind of what I would think, and that's probably just going to continue to hammer on Tesla for probably good ways. Probably a good ways. Also, people track the used electric vehicle market, and that has dropped off substantially over the past year. So, yeah, a lot of things not going right for Tesla, and it's just what happens when you get competition that comes into your space. They were the only players. It is no longer that case. All right, moving on. Let's take a look at the VIX. VIX moving up a little bit. Bounced pretty good yesterday. Didn't really have a reason to. We gapped up pretty good. We definitely sold off from the gap up, but it is what it is. VIX bouncing a little bit today. We're flat on the SP 500. We're not really doing much. Gapped up, sold off a little bit. So interesting move on the VIX. VIX has been very protective. You can see we topped out on the VIX back in mid-December. SPY continuing to make all-time highs. Made a new all-time high yesterday. So, people just continue to be very, very protective. And, that's just very evident here in the VIX. Let's see. PCC. Does the PCC kind of tell us anything? Put-call ratio? Not really. As long as it's down at this level, this is kind of the norm. This and lower. So, yeah. Not really telling us anything. Not a lot. I don't know. I need to do a little bit of research on what the difference is between the PCC and the VIX. You know what? I'm going to do that. I'll do that. DXY dollar bouncing pretty good here today. You would expect that with how good GDP was. Speaking of, let's look at GDP real quick, or the data we got this morning. So durable goods orders month over month came in 0%. GDP growth rate for Q4, this should be Q4, 3.3%. The market was expecting 2%. Prior was 4.9%, which was Q3. So that's kind of an interesting number there, 3.3%. And we came in, I'd say, quite a bit higher than 2%, which is what the market was expecting. Now, if you remember back in when we got Q3, when we first got Q3 data, it came in a little bit hot. I forget what it was expected to come in at, but it wasn't a huge beat like that. It was about in line, or maybe 0.1 or 0.2% higher than what the forecast was calling. But it was the revision that we got a month later that popped it up like 2%. That was crazy. So I wouldn't expect we get a revision that high. And the thing that's very interesting, though, is we got durable goods orders. And I get it. This is month over month. So this is looking, I guess, at November, December. And GDP is looking at all of Q4. But you wouldn't think durable goods orders would just be zero. I don't know. You would think they would have been more in line with forecasts at like 1.1. So something's really weird with data. Not with how much data just continues to get revised, and the variant. And I'm really kind of talking about the variances on data revisions from supposed to be the government sources of data are not. I mean, they're just unreliable because the variances are so large now. And anyways, we're gonna get some more data tomorrow. Core PCE, personal income, personal spending. But yeah, just that GDP number, man. Something weird. Something's been weird with data, and we'll see what data continues to come in at. GLD. Dollars up. Gold's up a little bit. It's down from the open. Probably makes sense because the dollar's probably been pushing higher since the open. Yeah, it's been pushing higher ever since we got GDP data. So yeah, dollar going to push higher, is not going to be bullish for stocks. Dollar looks like it's about to seriously push higher, but GLD, I don't think it would have a massive drop off, but I think it's going to struggle for a little while. It's probably just going to sideways consolidate for a bit. 10-year yield pulling back a little bit, still could just be consolidating here. Did not wind up taking out this high that we put in back on January 19th, which I would say that's probably good for how much we've pulled down today. So it could still just be consolidating in here. Kind of interesting that yields have dropped off as much as they have, even though GDP's up as much as it is. 10-2 inversion, got 2-year yield doing pretty good today. Or 10-year 2 popping pretty hard today. The 2-year yield, nice drop off there. Very much dropping a little bit more than the 10-year yield. Be interesting to see if we have a little bit of a head and shoulders form here. You get a shoulder neckline. I wouldn't worry too much about this really volatile wick day. You got head, neckline. So be curious to see if we come down to this level, form a shoulder. Kind of threw a lower wick into this area yesterday, but maybe we come a little bit lower with how much the yields have kind of dropped off here today. And then maybe see a base out. Yeah, I don't know. Be interested to see if we have that. And mostly because the only reason why I mention it is because of how in line this neckline is. Neckline's pretty much at the same level. HYG pushing higher. Yields have dropped. Kind of talking about over the past couple of days, we're getting to that point. Really, not really so much on the HYG, but the HYG very much is still kind of forming this, this pennant pattern that we got here. So we haven't really broken this out higher. So still in this consolidation type area until further notice. I mean, even if you take to the kind of the body of the candle from January 12th, it's kind of where we are now, kind of that top, but kind of depends. I like taking it actually at the wicks, so hey, it is what it is. LQD bouncing a little bit. I was hovering right on the support line yesterday. We're not really pushing higher so much, kind of flat on the intraday. Okay. I would want to see it like pop higher, but it's a pretty good gap today. Maybe it just consolidates and pop higher tomorrow. So we'll have to see how that looks tomorrow. TLT sideways consolidating down here, hasn't really reversed. Still just kind of just hanging out for now. Take a look at that sector rotation. 3 minute. Okay. So this is market performance for the day. Utilities, energies, real estate doing the best on the day. Communications also doing pretty good. Staples, industrials, materials doing pretty good. Financials. Okay, so I would have thought financials would have been higher. Okay. Financials, a little bit of outperformance. Tech, kind of in line, a little bit of underperformance there. Healthcare, underperforming pretty good. And discretionaries. Tesla, really kind of weighing on discretionaries there. So there you go. If we take out the gap, there we go. So we can see energies have actually done pretty well throughout the day, especially here over the past hour and a half, 2 hours. Roughly over the past 2 hours, they've done very well. XLE. Communications also done pretty good, but it's been fading down here over the past couple hours. Staples, utilities, industrials, real estate, materials, healthcare, kind of all outperforming there. Financials underperforming, discretionaries, tech underperforming, definitely over the past 30 minutes or so, a little bit over 30 minutes. They've definitely both been underperforming pretty much a lot. And you can see tech was actually outperforming pretty good into about the 2.5 hour mark of the day, 2 hour, 15-minute mark of the day. Not really doing well since then. Okay. That's interesting. I'm going to need to take a look here. Yeah, you can see tech has really gotten hit from that kind of high time period. Okay. Let's see. All right. Let me know if there's anything you want to look at. And we will take a look at it. See what the fallout is from TSLA. See what is going on with them. I do know quite a bit of what's going on there. See what Finance Yahoo had to say. So Tesla slide after warning of notably slower growth. Yeah, it's kind of stinks, but it is what it is. So what happens when competition comes into your space? So I like this headline because this is another thing I kind of wanted to talk about. Biden loves the strong GDP report. Yeah, it's great. Politically, it sounds fantastic. But the Fed might not. And that's the part I want to talk about. The Fed might not. So we know inflation, the CPI report and stuff that we got, inflation rate, this one. I'm going to bring up this. Inflation rate that we got this past, turn off log, this past month for December actually came in a little bit higher. I think the market was expecting 3 or 3.1, and we actually got 3.4. So it came in a little bit higher. And it'd be interesting to see what we get, when we get into February, what we get for January. Because, as we were just kind of talking about GDP, the past two GDP for the quarters were really good. The one we got for Q3, talked about the revisions that came in higher, but the GDP that we just got for Q4 was pretty high. That doesn't sound like slowing inflation or lower inflation. So it'll be interesting to see what inflation comes in at, because if this comes in hot again, higher than expected, or it's growing, I think people are going to start to have to really factor that into interest rate models and valuation of assets, because that'll be the big one, right? That'll be how you determine your valuation on your assets. So if you have to tick that higher, that might not be the best thing for risk assets. January, expected to be a hold. We'll get that next week. Interesting. So a week ago, we were expected to have a cut. Yesterday, we were expected to have a hold. They actually dropped off today. And roughly, it's a coin flip now. I would have thought this would have actually gone higher compared to yesterday, but it didn't. It actually came down, which is kind of baffling. I don't know why it was higher yesterday, but it was. But you can tell that we'll probably have another hold in March. Eventually, we'll get there. So you can see a month ago, like the market was expecting a 75% chance of a rate cut. Last week we were like a 54%. Yesterday we were down to 40%. Now we popped up to 48%. But I don't know why that popped up to 48% for a rate cut. That doesn't make sense because we had high GDP. So this is trending like we're going to have another rate hold in March. I'm curious about May. May seems like it's going to be locked in, that we're going to at least have one cut by May. Well, it's going to be a bummer if that changes too. So I think that will be the interesting one when we get into February, the second week of February, second full week of February, is what inflation comes in at. Because that will tell one heck of a story. What would the Fed do? What would the market do? I think it would be probably more important, because we know what the Fed would do. They wouldn't be cutting. And if we get back to growing inflation starting to tick higher again, like substantially, Do we see Fed possibly talking about increasing Fed funds rate? Man, that'd be an interesting one. Keep watch on yields. That's all I can say. All right. So we talked about Tesla. Let's take a look at Amazon. Also in that Tesla sector, discretionary sector, a little bit of a gap down, kind of choppy. Might be getting some choppiness, volatility from TSLA. Just being paired in that sector. Yeah, Amazon, nice drop early on. Then it got pop for about 2 hours. It's been rolling down ever since. Okay. Amazon. Let's see if it comes back down. AAPL. AAPL getting sold off. Was a very strong run here on AAPL from January 17th to the high of yesterday, January 24th. So about 5-6 trading days. Very strong move. Nice. Microsoft. So Microsoft. Apparently they had some layoffs. My buddy kind of mentioned that. I think it was Diet kind of mentioned that. So I don't know why the market keeps rewarding companies that keep laying off people. I think it's kind of an interesting note. This is a company that employs, I'm not even gonna guess, but well over 50,000 people, I think. Let me pull it up. It used to be in Finance Yahoo. Hopefully it is. I don't know. Oh, employees? No. Employee. Okay. Yeah. Well over 50,000. Full-time employees. 221,000 employees. Okay. Oh, here it is. Microsoft lays off 1,900. That is a nothing. That is a nothing to this company. That's not even 1% of this company. So, yeah, I mean that's a nothing burger. Don't. It's kind of. I don't even know why the market would even react to that. Anyways, kind of a interesting why companies continue to get love for laying off people. Alphabet hitting all-time highs today, up 1.75%. Nice. There you go. Alphabet finally getting up there. I couldn't believe Meta actually got back to its all-time high before Alphabet did, but beat it by a couple days. Alphabet had to really run up here over the past week. Wow, looking pretty good though. Throwing a nice little upper wick, not holding over it. How's that intraday look? Yeah, traded over it. Hasn't held. Looks like it looks like it's trying to base here and push. Maybe it pushes higher by close. Have to check that later. Any other headlines? So yeah, we know Tesla. Walmart accused of illegal union busting at California store. I'm pretty sure they'll be like, yeah, we don't care. It's well worth it. Stocks rise as GDP growth surges. Yeah, GDP growth surged. I don't really see anything else as far as major news. So we got BX. Is that BlackRock? Should be. That is Blackstone. What are you doing? Oh, you got earnings. That's why I was kind of curious. It's like, was it earnings? But outside of like the major financial earnings time period, yeah, nice gap up here on Blackstone. Beat top line by about 3%. Beat bottom line by about 17%. That's pretty good. Nice lower wick retest there. Traded down the first 20 minutes. Nice. Got negative, and then people bought it right up. People locked in profits, and then everybody else bought it up. There you go. All right, Blackstone doing pretty good. UNH, largest weighting on the Dow Jones, getting hit. Dang. Not even an earnings gap. Not an U.S. hospital operators rise after Humana warns of surge in medical costs. Oh. Is that what? Okay. Surge in medical costs. Interesting. Okay. Humana, not Humana. United Health Group seeing a pretty good gap down there. I mean, you're basically just going to be in a big buy zone here. Between, I mean, basically the low end of today, 480. You see a lot of lower spots there over the past couple of years. Down to about 445. I'd say 445. So there's going to be about 40 points here. It's just going to be a buy zone. It's going to be pretty tough to trade that bearish. There's so many different spots that have been reversal spots within that about 35, 40 points. So UNH probably just looking to be buyers as it continues to go lower. If it continues to go lower. All right, what else we got out there? What is this? MMC. Nice lower open. Nice lower wick. Missed top line by 2.5%. Beat bottom line by 3%. Okay. It's been in a nice choppy range here for the past half a year, roughly. People are definitely going to be looking for this head and shoulders. You got a shoulder, neckline, head, neckline, shoulder. What is it? What are we going to do here? What are we going to do? Even got a head there. So, yeah. I mean, be curious to see. I wouldn't want to play that head and shoulders. Looks too funky to me. But if we do break this 184 level, I mean, people are obviously going to see that. And you're probably just going to take it on a retest and try to go bearish on it. Other than that, yeah, looked okay. Let's see. Crude oil. Let's go check out crude oil. Saw that energies were doing really well. All right. Okay, so this is kind of that we were kind of talking about. Was it yesterday? Maybe it was yesterday. So we got this A, B, gonna have a C somewhere soon. We could be into that C now. Could be into that C. So what are we going to do? How far are we going to push on this C? If we take out these highs back from November, maybe we can talk about being bullish. But other than that, I think you're probably going to be looking to be more bearish on it than anything else. Anyways, crude oil, nice push today. Gasoline looks like it's definitely based pretty good. Also, nice little ABC getting above this high from late November. I think you're going to want to see crude make, actually all of these commodities, crude, gasoline, heating oil, that was the other one, heating oil, all probably roll over one more time. And if crude goes down and makes a new low, and gasoline and heating oil does not, I would be wanting to be more bullish if that happened. Yeah, crude oil though, doing pretty good today. Energy's total doing pretty good today. Okay, looks like it was just kind of steady throughout the day. It wasn't like like a report came out time period or anything like that. Boeing. Take a look at Boeing down 6%. Ouch. Yeah, I mean, this thing's been getting hit so hard ever since what was it, Alaska Airlines and that door popping off of the 737 Max. They're gonna have earnings next week. Um, I think there was starting to be a lot more rumblings of the CEO to get fired because he's had a lot of issues under his belt. Right, the 737 Max has been just a constant headache for this company. So shareholders are probably not loving it. Speaking of loving it, McDonald's. What is going on with McDonald's? McDonald's, man. I have to go get me a sausage biscuit after this. Yep, all time high. Not is that all time highs? Yeah, all time highs. Last week, that's how it ended the week. All time highs on Monday, but hasn't really done a whole lot. Definitely hasn't broken down. Could just be retesting these previous highs. But we're starting to make a lower high here on the daily between Monday and Wednesday. We're also making a lower highs from the week. I also don't like how bearish, I mean, this looks for the day. Like, we sold off pretty good on McDonald's here. Maybe we'll see a rally this is the first time it's actually hit the 10 EMA since last week. So maybe we'll see a bounce here on McDonald's. Hasn't broken down. If it gets back below that 20, talk to me. Other than that, probably just looking to be bullish. All right, what else we got? So that was McDonald's. What is going on next to McDonald's here? CMCSA was Comcast. Diet Cola is back. I don't want to get copyright strike, so I would sing a song that we always sing. Let's see here. So Comcast killed it on earnings. Beat it by 2 2/3 on revenue. Beat bottom line by about 7%. Jeez. So Diet, you actually mentioned, you hit me up in you DM'd me that Microsoft laid off like 1,600 peeps or something like that. I can go back to it. Let me just go back. Here we go. So full-time employees. Oh yeah, 1,900. So full-time employees, 221,000. Not really even a big deal. It's not even a rounding error. It is a rounding error, but I mean, yeah, it's not a big deal to them, right? I know it mostly comes from the gaming. It's 9% of the gaming staff, but it's less than 1% of the company. So for Microsoft in totality, it's not really a big deal. But kind of interesting on the gaming side. Wonder what their focus was on the gaming side. Anyways, I got nothing else. I mean, Tesla's obviously the big story of the day, and honestly, that's second to GDP. I mean, the GDP number that probably really helped save the market this morning because we weren't even gonna gap up. We were gonna open pretty much flat, and then we got that GDP report this morning. And basically, we were going to have roughly a flat open, but then we got the GDP number and it just immediately bounced. But it's not like stock people were. I mean, this is all future side. I mean, this is. It's not like stock people are like, yeah, you know what, we're bullish. So it's not. I'm not saying it's time to be bearish. We're not breaking down any major levels or trends or anything. Just is what it is. People are just kind of locking in profits, probably looking to go into other areas, and there you go. We can run through semiconductors really quick. Probably just redundancies with ATVI staff. Oh yeah, probably back office. Probably a lot of their back office, Activision's back office. That's usually always the first people that get cut after an acquisition. It's all your accountants, support staff, back office piece. Yeah. My question is, has the Fed called a recession? Um, the Fed doesn't call a recession. That's not their job. That's the Department of some Department of Economics or some crap like that. I forget what the actual um, government agency is that does call that, but no, there's also no reason to call a recession right now since we just got GDP that came in at 3.2%. So for Q4. So yeah, pretty good quarter there. Nvidia, nice gap up today. Definitely selling off a little bit. Let's see, Nvidia, AMD. AMD gapped up, selling off a little bit. Intel gapped up, selling off. Texas Instruments, slight gap up, definitely got sold off. Qualcomm gapped up, sold off. TSM gapped up, sold off. LRCX, I think they had earnings yet. LRCX gapped up, traded higher, has faded after that trading higher initially. I was looking at that one this morning. AMAT probably getting a little bit of that love as well, but yeah, gap up, selling off. A lot of selling coming in semiconductors. They all look about the same. AVGO probably gap up and sell off. Gap up and sell off, of course. Yeah. Pretty largely extended here on a lot of semiconductors. They've been on a pretty good run over the past month, a little bit over a month. So I would be probably a lot more protective on semiconductors if you've been bullish here. As you know, they've been pretty extended, and they're probably going to continue to have good earnings. But I think the equities are probably really extended at this point in time. And a big reason why, what TSM said on their earnings is, I'm not even going to go back and try to find the article, but basically, their earnings, reason why they did so well in earnings is they are able to charge more because all of these new technologies require the latest chipsets, like 3 nanometer and stuff like that. So they are able to raise their prices, and that's the area where I would be really careful on semiconductors, because what they said makes it seem like since they're an actual fabricator, the other semiconductor companies like Nvidia, AMD, Intel, Qualcomm, whoever, Apple, AAPL as well. They have chips that come from TSM. It definitely makes it seem like they are going to have margin squeezes. Our margins are not going to be growing as much as what they've said before. So that would be something that would worry me if I've been bullish on semiconductors, and probably one that I would want to be a little bit more protective on. So like you said, a lot of layoffs have been announced in 2024 already, and many times the bottom of the market is in by the time a recession has been called. Well, there's no recession. We're at all-time highs, so definitely no market bottom in like a year and a half. About a year and a half. It's been not quite a year and a half. So have we seen the bottom, and are we in recovery mode? Honestly, I don't know. I just think we're in bubble mode, and that's what it is. I just think we're in bubble mode. There's nothing you can do about it. This is the World Stock Index. This thing hasn't hit all-time highs. Let's see, where's China? China? Oh, whoops. I mean, China's had a couple of days of really strong bullish activity, but, I mean, China's back down to those lows that they put in back in October of 22 when, the markets around the world, bottomed, basically, right? But China's the second largest market, second or third largest market in the world, definitely the second largest economy. I mean, it has not performed well in 2023. Japan doing pretty good. Europe, okay, but not back up there. Not back all-time highs. There's just a few markets out there. India's close to all-time highs. Not a lot of markets that are. Where's Mexico? United Kingdom, Germany, France. I just went through this like the other day. So. Japan making its move up there. Anyways, let me find Mexico. There it is. Mexico's doing pretty good. Mexico's doing pretty good. Obviously, it topped out back in like 2013, but they've been a big beneficiary of kind of the trade war that's been going on between U.S. and China, because now U.S. is getting more cheap stuff from Mexico, so they've been doing pretty good. So that's where a lot of manufacturing's been going. A lot of manufacturing's been going to back to Mexico and the U.S. because of the trade war and tariffs and all that stuff going on between China and the U.S. So that's just kind of how it is. There's not a lot of positivity outside of big tech. The Qs. I mean, there you go, all-time highs. So that's just where money flow is going right now, and it seems like a lot of investors are just kind of going to that spot because, like, they're not gonna have problems. I don't think they're going to be growing as like their equities are going to perform all that great over the next 4 to 5 years, but they're not going to have problems. So, yeah. I mean, other than that, Alpha, I'm good. Let me know what we can take a look at. We can take a look at stuff tomorrow. Wrap out this week. We will get a few data points tomorrow. But other than that, I'm good. Hopefully you're good. It is actually sunshiny in San Antonio, Texas today, which is nice. I love the rain, but man, it comes all at once. Alpha Hunters, have a great rest of your day. Take care.